The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. President Trump looks to postpone his China trip, saying his focus remains on the conflict in the Middle East.
It's very simple. We got a war going on. I think it's important that I be here. So it could be that we delay it a little bit. Not much.
The US president heading out at European allies after several leaders reject his demand to help escort tankers through the Strait of Hormuz. Trump saying countries should reconsider based on their oil needs.
It always bothered me that we're protecting and we don't need them. We don't need oil. We have all the oil we need for ourselves. It's one of the great assets that we have.
US futures point to a day in the red on Wall Street, with Trump again calling on the Fed to cut ahead of its meeting starting today, after the RBA fires the starting gun on a week of central bank action by tightening policy.
We're getting into the weeds in how China figures in the Iran conflict, but just the latest today as President Trump says the US has requested to delay his planned meeting with China's Xi Jinping by, quote, a month or so. As he cited the ongoing conflict in Iran, Trump reiterated that the request to delay was solely down to the war and not because of any tensions with Beijing over trade.
Because of the war, I want to be here. I have to be here, I feel. So we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship, but because of the war, there's no tricks to it either. It's not like, oh, gee, I'm waiting. It's very simple. We got a war going on. I think it's important that I be here. So it could be that we delay it a little bit. Not much.
CNBC spoke to Treasury Secretary Scott Bessent before Trump's announcement. Take a listen.
There's a false narrative out there that if the meetings are delayed, it wouldn't be delayed because the president's demanded that China police the Straits of Hormuz. It would be
because there was a report out to that effect this morning.
That's completely false. So if the meeting for some reason is rescheduled, it would be rescheduled because of logistics. The president wants to remain in D.C. to coordinate the war effort.
Bessent described the latest round of trade talks with his Chinese counterparts as constructive. Officials from both sides met in Paris over 2 days, with Bessent saying discussions focused on how to promote stability in the relationship, including, quote, how to manage bilateral trade and improve market access for the United States. Brian Sullivan filed this report.
It was an eventful day of conversation here in Paris, France, not just between the Treasury Secretary, Trade Representative Jamieson Greer and the China delegation, but also our exclusive interview, wide-ranging interview with Treasury Secretary Scott Bessent. First off, to the issue of trade. There have been some reports out that Donald Trump's planned or expected meeting with President Xi Jinping of China, potentially in Beijing in April, might be delayed. And if it was delayed, it would be because of President Trump's unhappiness with China's seeming unwillingness to help with safe transit of the Strait of Hormuz and the Persian Gulf. We asked the Treasury Secretary about it. He said, no, that is false. That is not true. That if there is any delay to that expected meeting in April, it is because of the war and not because of any kind of disagreement with China. Here's exactly what he had to say.
And there's a false narrative out there that if the meetings are delayed, it wouldn't be delayed because the president's demanded that China police the Straits of Hormuz. It would be
because there was a report out to that effect this morning.
That's completely false. So if the meeting for some reason is rescheduled, it would be rescheduled because of logistics. The president wants to remain in D.C. to coordinate the war effort.
We also talked a lot more about the war and the rise in the price of oil over the last couple of weeks. And the Treasury Secretary made some interesting comments. Number one, he said that they thought, by their estimates, the deficit in global supply was about 10 to 14 million barrels per day. That's higher than some had thought, but he expressed optimism that perhaps that the war would end soon and the flows would resume sooner than later. And I also asked him about these rumors that have been going around online that maybe the U.S. government or Treasury was intervening in the oil or capital markets. He said, no truth to that at all. They wouldn't even know how or basically the mechanism to participate in oil and financial markets as well. The full interview cut up in two parts on CNBC.com. A lot of headlines from Paris, France. For CNBC Business News, I am Brian Sullivan.
This is where oil is trading at the moment. Can I just point out some basic math? The assumption from the administration, this is a 4-week conflict, yeah? Wasn't that what we heard pretty much? 4-week conflict? Yeah, I'm getting nods from Ben and Karen. From the 28th of February to the 31st of March, 31st of March being the first day of when the Trump-Xi meeting should have happened in Beijing, 31st of March to 2nd of April,
yes,
is 31 days. 28th of February to 31st of March is 31 days. So that means that the president expects this war to be longer than 4 weeks. Just going to chuck that out there for everyone. Everyone is hoping for a swift end to this. God knows we all hope that this will end soon enough as well. The fact of the matter is, Trump originally had said this is about a limited campaign, operation, not a war, 4 weeks. 4 weeks is 28 days, 31 days from 28. So you can see what I'm saying here as well. I think maybe we should be a little bit more concerned about the length of this disruption. OK, speaking to reporters in the Oval Office, Mr. Trump claimed that Iranian attacks on America's Gulf allies came as a surprise.
Nobody, no. The greatest experts, nobody thought they were going to hit. They were, I wouldn't say friendly countries. They were like neutral. They lived with them for years. Peter, they were going to take over the Middle East. They were going to knock out Israel with their nuclear weapon. But after we knocked out their nuclear potential weapon, they started building missiles, thousands and thousands of missiles. If I didn't terminate Barack Hussein Obama's Iran nuclear deal, you would right now, well, Israel would be gone, it would be incinerated, and probably the Middle East likewise. All of a sudden, Kuwait is getting hit. Bahrain is getting, all these countries are getting hit. There was no expert that would say that was going to happen. It's not a question of like, gee, should you have known? And if we did know, big deal. I mean, we have to do what we have to do.
There's a lot to digest, but I want to stick to the facts. Mr. Trump says we produce a lot of oil. Fact, the US is one of the world's top oil producers, no doubt about it. We produce all the oil we need. Not a fact. Actually, the US imports a lot of oil from, albeit with friendly local neighbours, the likes of Mexico, the likes of Canada. Canada, huge exporter into the US as well. But for the US to say that it is insulated from this because of how much oil it produces is not a fact. And I think one stat, which I'll just say, and I'll leave it to you two then, really underlines everything. Since the start of the war, the national average for a gallon of gasoline has risen to the price I have yesterday, the most accurate figure I have, is to $3.718. That is a national average. Of course, there's some in more expensive states, and then there's some lower stuff as well. That is up 79 cents from a month ago. So it went from roughly $2.93 to $3.72, right? That does not mean that the Trump administration, the US economy and the US consumer is insulated from events in the Middle East.
If I can make a couple of other points here around China, and I think there's an undercurrent that China is extremely important to the Chinese administration. The fact it's being pushed out, they don't want any of the Iran conflict to touch the sides here. And that messaging about the false narrative from Besant about whether China has been strong-armed effectively into helping protect the Strait of Hormuz, that it's a false narrative. It was Trump himself who told the Financial Times that he might postpone a meeting with the Chinese if they didn't help unblock the Strait of Hormuz. So the false narrative, where did it come from? It came from the president himself. So the fact that this is now a rowback from administration officials tells you that they don't want to be going into negotiations with the Chinese, trying to strong arm them over anything. progress has been made behind the scenes on the product of agriculture, soybeans in particular, trying to bolster trade ties. So to me, it says that the Americans are very serious about the negotiations on trade with the Chinese, and they don't want to jeopardize anything to do with those negotiations, given the extent of this rollback. The other point around the Strait of Hormuz is that the Americans are now trying to massage the message here that there's been history before when the Chinese have helped protect shipping lanes around Somalia, for instance. We know the Chinese are very invested in some ports, and even last year they were talking about some sort of alliance, global alliance to protect shipping. So there's some history there. Perhaps the Chinese don't need to be strong-armed. Perhaps there is a convincing argument anyway for the Chinese to be involved in some sort of global alliance.
I've just put out a piece on LinkedIn and on my socials as well, talking about China's position. And it's a very nuanced position. And many thanks to China expert Andrew Collier for his excellent piece this morning, which I've tried to portray in my socials. China remains vulnerable. Iran supplies 13% of its crude and 25% of its gas imports for China pass through the Strait of Hormuz. So China is vulnerable. But China is ready, way more than the West. How about this? China has built up a reserve of 1.4 billion tons of crude oil, which, according to Erica Downs, senior research scholar at Columbia University, is enough for 6 months' supply. China is ready for longer-term disruption.
And I think that plays into an analysis that I saw, which said that this disruption was the most foreseen, unforeseen event. The world has known that the Strait of Hormuz was this choke point that left it very vulnerable. And the strategic problem here is that Iran now knows that it has that as a foot on the throat of the West. If America decides to take similar action in future, let's say there's a cessation of hostilities to all this, it all comes to an end, in a matter of weeks, perhaps. Iran knows that if there's ever any aggression, it can threaten not just America, but the world economy by choking off the Strait of Hormuz again. It doesn't even have to hit all the ships. It doesn't even have to target them. Just the mere threat of it is enough to make the shippers and all those companies wary about travelling through.
There's no doubt there's oil implications, but there's also a foreign policy implication here for China. I mean, we had the assumption in recent weeks and months that the Venezuela situation showed that the American president was only interested in the Western Hemisphere. He's shown everything but that now, that he's willing to go into conflict far afield for strategic imperatives. And if you think about Taiwan, how the Chinese view Taiwan as their own territory, that if there were to be any aggressive moves from the Chinese on Taiwan, which holds the bulk of the world's semiconductors as a choke point, you don't think the Americans would get involved now? I'll leave that question.
I think actually almost the opposite. I think it proves what a quagmire, a superpower, a hegemony can get itself into with a supposedly weaker foe.
And I think what's the question I wonder is, when President Trump began all of this, did he think he would be in a position of having to call on NATO allies to help reopen the Strait of Hormuz? I suspect he didn't think he would be in that situation.
US President Donald Trump's demands that countries participate in securing the Strait of Hormuz has been met with scepticism from Washington's European allies, with leaders expressing a reluctance to participate. The lukewarm response drew the frustration of the US leader, who said countries should be jumping to help, in particular hitting out at the UK Prime Minister Sir Keir Starmer. Trump outlined why the approach of several nations to the critical waterway bothers him.
China is a great example. They get 91% of their oil from the Hormuz Straits, which we protected for years. And it always bothered me that we have these countries. Japan gets 95% of its from the Straits, the Hormuz Straits. And it always bothered me that we're protecting and we don't need them. We didn't need them before we started dig we must. Dig me must. That's the Trump policy of lots of oil. And we didn't use them very much. It used to be at 10%. Now it's at almost zero. We don't need oil. We have all the oil we need for ourselves. It's one of the great assets that we have. We have more than double what anybody else in terms of oil production. We're at more than double any other country. So we don't need it, but we did it. It's almost, you could say we did it out of habit, which is not a good thing to do. But we did it because we have some good allies there. We have some great Middle Eastern countries there, Israel there. So we did it for a lot of reasons. But it always amazed me that we did it. We never asked for reimbursement. And it was really there to serve other countries, not us.
Iran's foreign minister has dismissed a report that a direct channel of communication has been reopened between himself and US envoy Steve Witkoff. In a post on X, Araghchi said any claim of communications is aimed at misleading oil traders and the public. And let's get out to Dan for more. Dan, walk us through the latest developments there.
Karen, good morning to you and good morning to you all. Well, first of all, it's day 18 of this war and the UAE continues to come under attack. Earlier today, authorities closed down airspace across the country, confirming that the UAE was still being the recipient of what was incoming Iranian drone and missile attacks. What we also saw was authorities confirming a second strike on the Fujairah oil industrial zone. This is a critical piece of energy infrastructure on the east coast of the country, now being hit twice by Iranian drones in less than 24 hours. Earlier, authorities also confirmed that there had been a strike on the Shah gas field in Abu Dhabi. This is also a critical piece of energy infrastructure responsible for a significant portion of the UAE's natural gas output and, of course, electricity domestically as well, critical for powering things like the UAE's desalination plants. Authorities said that a fire had been extinguished and was being managed and there were no injuries, but this ultimately shows that after a similar attack on the UAE's Ruwais side, that the Iranians continue to target energy infrastructure in particular. At the same time as well, what we've also seen is those airspace closures resulting in multiple flight cancellations and diversions. Earlier today, we also learned that British Airways would be stopping all flights in and out of Dubai until June, effectively conceding defeat here because of the ongoing threat, because of the ongoing airspace closures, essentially saying that it was packing up and not coming back until the summer. And at the same time as well, we're seeing very limited flight activity in and out of the UAE because of this regional backdrop. What we're also going to see is likely as well international carriers following suit. So that's the situation on the ground today, and we'll continue to monitor developments.
OK, Dan, many thanks indeed for that. Still to come on the show, UK Chancellor Rachel Reeves prepares for a key speech as she pledges to boost growth. Plus, a fresh demand forecast from Nvidia boosts global chip stocks. And we will dig into the outlook for capital markets with the CEO of Euronext. That exclusive interview is coming up right after this break.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
We saw a tech-led bounce stateside yesterday and reflect on the Nasdaq and the outsider's pop of 1.2%. Semiconductor stocks, Nvidia 1 point on the back of its developer conference. Investors saw a little bit of upside, but then some of that quickly being given back. Not enough bang for the buck in terms of the announcements, as Nvidia was talking about the switch towards inferencing and where some of the demand opportunities lie in that part of the market. But if you look at the extent of the rally yesterday, big moving stocks to the upside were Nvidia in session for the S&P and the Nasdaq, and it was Goldman Sachs and the banks for the Dow. Don't forget banking stocks under pressure stateside amid the Iran conflict. So a little bit of a rally taking place there. But across the board, you can see some pickup in that trading session. Now, taking to Australia, and don't forget it's been a bumpy ride, the same catalyst impacting what we're seeing across the board on these markets. The weakness in the oil price yesterday, bounced back today. Japanese stocks giving back some territory. And you can see it's the Australian market we're looking at very closely today. today. The ASX 200 modestly firmer, as it really is the first central bank to break the seal this week. The bank in Australia, the Reserve Bank, voted for a second straight rate hike overnight, with the central bank forecasting inflation peaking at over 4% in the middle of this year, even before the impact of war in the Middle East. The decision kicks off a packed week of central bank action as we await decisions from the Federal Reserve, ECB, Bank of England and Bank of Japan, among others. Although even though we may not see some moves, it's the messaging that could come through in terms of how some of those policymakers are now thinking about the impact of higher oil prices, also driving up inflation over coming months, and whether that skews the picture when it comes to monetary policy. Now, moving on to European futures, yesterday we did see a gain for the Stock 600, up 0.4%. This morning we are looking a little bit soggier. And don't forget, the Fed is set to kick off its two-day policy meeting today. We're expecting a hold from the central bank. That is what we're watching very closely as we also gear up for the US market action. A look at those US futures. So far, we are perched weaker, as you can see, down 1/3%. We're expecting a hold, just a reminder, for that central bank meeting tomorrow. Investors will be closely watching any commentary on a rate outlook in the wake of the Middle East conflict. Markets no longer fully pricing any cuts this year, but the president has renewed his calls for easing, of course, even suggesting what he described as a special meeting to cut rates. Ben.
Euronext is hosting its annual conference in Paris this week, with the focus firmly on the outlook for markets and the wider macroeconomic landscape as the geopolitical backdrop becomes ever more uncertain. Charlotte joins us there live from the event with a rather special guest. Charlotte.
Thank you, Ben. A special guest indeed, Stéphane Boujnassi of Euronext. Thank you so much for having us here at your annual conference. So the title is Strengthening European Capital Markets Now. And I like this now because I know you've been a fervent advocate and a loud advocate for the Capital Markets Union, the Banking Union, the Savings and Investment Unions, all the unions. But given the geopolitical context now, how much of a priority is it?
Well, it is a priority for the leadership of the European Union, and it is happening, not only because Europe needs to be stronger in every respect and more autonomous. The developments for the past 12 months show that Europe is more lonely than ever and has to build its own strategic autonomy. But I do see an acceleration in the leadership. For years, we had people in charge who were managers of complex institutional processes. It seems that we have now leaders of transformation. I mean, the paper that the European Commission put on the table on the Savings and Investment Union under the leadership of Maria-Luisa Albuquerque is more ambitious than ever. The European Council is more ambitious than ever. You may have seen that last week the 6 ministers of finance of France, Netherlands, Germany, Italy, Spain, Poland, etc., representing 72% of the GDP of Europe and 70% of the population of Europe, sent a letter where they say, we agree on the substance of the Savings and Investment Union and we want it to be delivered this year. And this shows that the commitment is changing and that the leadership is there.
Well, it's interesting, so there's this renewed sense of urgency. I know you said that Trump was a wake-up call for Europe. At the same time, you have all these leaders basically fighting fire constantly with tariffs, the geopolitical situation, etc. These kind of unions are hard to get off the ground at the best of times. So now, do you think there is bandwidth? You really see there is a sense that they're acting now?
There is no good time to do great things. What I can tell you is that among the best achievements of the European Union over the past few years, many happened in heated crisis time. I mean, we were able to order vaccines and to distribute vaccines to 450 million inhabitants of this part of the world at the cheapest price ever, than any other places in the planet in a matter of months during the COVID crisis. We were able to restructure the energy markets in Europe after the invasion of Ukraine in 22, after the third invasion of Ukraine in 22, in a very efficient manner. We are able to support the war in Ukraine with significant resources, especially since the US have pulled out, in a very material manner. So when we want, we can. And when Europeans want to deliver something, they can do. They find shortcuts, as demonstrated for vaccines, for energy, or for the support of Ukraine. So I'm confident that things can be delivered this time more quickly than ever.
So let's talk about how the current geopolitical uncertainty is affecting your business and talk about your IPO pipeline in particular. 25 was a bit quieter than 2024. 26 started really well. But now, given the ongoing uncertainty, how much is it affecting companies thinking of going on the market given the volatility?
Well, the paradox is that the pipeline has never been so strong, in particular, and that's not a paradox, in the aerospace and defense sector. When we look at the largest IPO since the beginning of the year that we welcomed on Euronext, clearly the largest one was CSG, the Czech armament company. We have in the pipe the spin-off of the Kongsberg aerospace and defense business, which is going to spin off its maritime business. In Oslo, we have a Czech company called Colt. Clearly, KNDS, the Franco-German armored vehicle companies and ammunition companies, is going to be part of the pipeline. So, and we have more and more of those companies trying to raise capital, just because aerospace and defense companies are in the sweet spot of higher valuation than ever, strong need to raise equity to build additional capabilities and to create more output, and appetite from the investors from the rest of the world. So the aerospace and defense sector is probably going to dominate the IPO trends this year.
We do see, though, a lot of European companies delisting from Europe or just listing altogether in the US rather than in Europe. How do you stop this trend?
Well, two comments. First, the trend you describe is strong in the UK, is strong in Germany, is strong in certain geographies that are not part of Euronext. Within Euronext, we don't see to the same extent this trend. We see the other way around, a disproportionate number of international IPOs, just because we have built within the single integrated European market, equity market of Euronext, a market of 6.8 trillion of aggregate market capitalization, which is twice the size of the London equity market. Every day we trade average daily volumes in equity of around 12, 13, 14 billion euro, which is more than twice the equity market of London and more than 3 times the size of the equity market in Frankfurt. So countries that have shallow equity markets have these problems. Countries that are part of the Euronext integrated European single technology platform, single liquidity pool, do not have the problem to the same extent. Nevertheless, these exist. That's why we have very intense interactions with pre-IPO companies through IPO-ready type of programs to make sure that when they think about liquidity, when they think about high valuation, they consider Europe and not only the US. And this trend, at least within the countries that are part of Euronext, and at least for the international European companies that want to list in Europe, is pretty successful. I'm not as concerned as people can be in Germany or in the UK, where this trend is much stronger.
M&A has been a key part of your strategy. Athens has been the latest exchange that you've added to the group. What now then for Euronext?
Well, Euronext, M&A is a consenting adult game. So we are a willing buyer and a willing consolidator of market infrastructure in Europe, but we need willing sellers. And it's not up to me to decide whether operators of market infrastructure in Europe want to be part of a single integrated European group with critical size. Either we build together a sort of Airbus of market infrastructure, which is Airbus is a global competitor to Boeing. Either we succeed together or we fail separately. We have decided to succeed together, but I can't force anyone who wants to continue its own domestic local journey to stay local. It's a decision that because we don't own the other assets, otherwise the problem will be there. That this is a decision, a question to be asked more to the board members and management teams of the other assets than to me.
Elliott, the activist investor, built a stake in LSEG. They're asking to shake up the strategy on that front. They're very exposed to the data business. You say it's not the case for you, that you missed the Titanic on that one. Would you consider talking to Elliott, to LSEG potentially?
No, we don't talk to Elliott. We have no intention to talk to Elliott. We are available to talk to the management of LSEG, and we speak from time to time on numerous issues to the LSEG management. We are available to talk to the board of LSEG, but we do speak on a regular basis to peers. We do speak to people who want to discuss strategic issues. We do not speak to Elliott, and we have no intention to speak to Elliott, because what happens within the shareholder base of peers and competitors is not our business.